The Whale Playbook, How Market Titans Sink Crypto from the Deep. 1. The question nobody asked out loud. What if the last crypto crash wasn't chaos, it was choreography? The scene looked random: red candles, liquidations, panic. But maybe that volatility was a performance directed by the few who hold more Bitcoin than small nations. So what does that actually mean? It means the market's not a democracy, it's a monarchy. And most of us are the peasants funding the castle. Footnote. This section introduces the core idea that major crypto crashes may result from coordinated manipulation by elite holders. 2. The whales among us. They're called whales, a polite way to say financial sea monsters. Anyone holding over 1,000 Bitcoin joins this exclusive club. At today's prices, that's $100 million handshake. These aren't hobbyists. They're hedge funds, exchanges, corporations, and early pioneers who got in when Bitcoin was cheaper than a latte. Their names are hidden behind wallet addresses, but every move they make is carved permanently into the blockchain. You can't see their faces, but you can trace their footprints. And they know that you're watching. That's part of the game. Footnote. This section defines crypto whales as powerful entities able to move markets through large, traceable on-chain transactions. 3. How to crash a market in 3 easy steps. First, brute force. One whale market sells 10,000 Bitcoin. Order books collapse. The price drops like a piano off a balcony. Panic ignites, and automated liquidations finish the job. Second, they play the liquidity game. Moving coins off exchanges shrinks supply, bullish optics. Moving them back on? That's your early warning siren. Third, they turn psychology into profit. A flash crash doesn't just kill confidence, it harvests it. You panic sell, they quietly reload. So what does that actually mean? The crash isn't an accident, it's inventory management. Footnote. This section outlines core whale tactics, mass sell-offs, liquidity control, and psychological exploitation during flash crashes. 4. The hunt. Stop-loss orders, every trader's safety net, double as bait. Whales know where the clusters lie, below support lines and round numbers. They nudge prices just enough to trigger a cascade. As retail traders panic sell, whales buy everything back cheaper. It's not evil, it's efficient. Ever get stopped out right before the market bounces back? Congratulations, you just funded someone's yacht. Footnote. This section describes stop-loss hunting as a coordinated tactic to trigger automated selling and acquire discounted assets. 5. The illusions. When brute force gets messy, whales switch to theater. Spoofing, placing fake buy or sell walls to lure traders into false confidence. Wash trading, buying and selling with themselves to fake popularity and create artificial volume. Both tricks rely on the same weakness, our love for what looks busy and important. The louder the data, the more we trust it. Ironically, in crypto, noise is the camouflage. Footnote. This section explains spoofing and wash trading as psychological manipulation tactics that fabricate market confidence or fear. 6. The mind games. Numbers move markets, but stories control them. Enter FUD and FOMO. Fear, uncertainty, doubt to crash prices. Fear of missing out to pump them. One rumor about an exchange hack here, one 100x altcoin influencer campaign there, and the crowd dances exactly as planned. When headlines scream bloodbath, whales smile. When everyone's screaming moon, whales are quietly selling into your optimism. So what does that actually mean? Whales don't fight emotion, they farm it. Footnote. This section examines how whales manipulate sentiment through misinformation cycles to profit from retail emotion. 7. The August 2025 experiment. Case study, One entity dumps 24,000 Bitcoin, $310 million, in minutes. Flash crash. Stop loss dominoes. $550 million in forced liquidations. Media panic. Retail capitulation. Then, rebound. The same attacker likely buys back in at a steep discount. A perfect whale attack, fast, psychological, and invisible until too late. So what does that actually mean? When you feel like the market's attacking you, it is. Footnote. This section summarizes the August 2025 flash crash as evidence of coordinated whale-induced manipulation. 8. Swimming, not sinking. So how does one survive a financial ocean full of predators? Think like a whale. Set stops where they don't expect them, or don't set them at all, use alerts instead. Watch on-chain data. If large wallets start moving Bitcoin onto exchanges, batten down the hatches. Question volume spikes. If it smells like hype, it probably is. And never trade on emotion, whales write the script for both panic and greed. You can't beat them, but you can stop being their lunch. Footnote. This section offers defensive strategies for small investors to avoid predictable losses to whale manipulation. 9. The final truth. The crypto market isn't broken, it's just unfiltered human nature on a digital scoreboard. Greed, fear, and ego are still the main currencies. Knowledge is the antidote. The next time you see a sudden drop or spike, ask yourself, did something fundamental change, or did someone just cash in on your reflexes? Empires fall to debt. Traders fall to emotion. Don't let either write your story. Footnote. This section concludes by linking emotional discipline and data literacy as key defenses against manipulation.